Howdy swings. As predicted in yesterday's video, the market bounced back from yesterday's decline today. However, once the SPX reached 5650, the sell-off started around 2 p.m. for no apparent reason. By the end of the day, the market was back to exactly where it closed yesterday, suggesting that the market is waiting for news that could be a trigger before it decides on a direction. Which way will the market move tomorrow, upward or downward? Let's take a look at Fullhapce daily swing market forecast to get some answers. Let's review daily market index movements. Dow Jones and Russell are up, VIX is down big time. The daily fluctuations in VIX have been staggering lately. Here we go. SPX is exactly same as yesterday's close, 5591.96. Dow Jones 0.59% up, Nasdaq 0.23% down, Russell 0.86% up, and VIX index 8.53% down. Let's look into the daily sector performance. Banks, insurance, software, networking, internet, airlines, capital goods, energy, materials, transports, and autos were bullish. Consumer discretionary, consumer staples, tech, and REITs were bearish. Here are the reasons. Stocks had a very good morning but lost some of their gains in the afternoon. Positive news, including encouraging economic data, expectations that interest rates will continue to fall, and good earning reports helped to drive stocks higher early in the morning. However, Dollar General worried the market with a significant downward revision to its annual sales forecast. NVidia's stock didn't fare as well as expected after failing to meet the market's extremely high expectations. Here are the things to consider. The US economy had a Goldilocks moment in the second quarter, with the GDP revised upward, core PCE revised downward, and jobless claims unchanged. Inflation rates in Spain and Germany fell significantly in August compared to July. The European Central Bank is expected to cut interest rates on September 12th. The People's Bank of China is preparing additional stimulus measures. Trade tensions between the EU and China eased somewhat as China decided not to impose tariff on European brandy. NVidia reported strong earnings and expects continued growth. The U.S. National Security Advisor met with the Chinese President Xi Jinping. Israel and Hamas implemented a partial ceasefire that allows children in Gaza to be vaccinated against polio. Houthi rebels allowed salvage operations of the damaged oil tanker in the Red Sea, easing tensions somewhat. Here we present the daily market forecast for swings. The weekly market potential is still bullish, while the daily market potential is weakly bearish with a heightened uncertainty, which has been unusually hesitant to move for several days. As a result, the market failed to move above SPX 5650 again today. Interestingly, support has developed around 5600, which makes it seem like support is stronger and downside pressure is weaker than before. But it still seems like investors lacked the confidence to break through the SPX's all-time highs. The unexpected plunge, even though a full recovery was our expectation, and the fact that the SPX retraced exactly to yesterday's closing numbers illustrates the market's hesitation. As a result, the market hesitation we've seen over the past few days could continue for a few more days through the long weekend. Nevertheless, we believe that on Friday, August 30, the market will retest the SPX 5650, and we are leaning towards a possible upside close at between SPX 5600 and 5650. Starting next Tuesday, the market is likely to struggle at SPX 5650 with a few range-bound moves, but the market might eventually make a new highs afterwards. Here are some additional insights. The main factors that drove the stock price up recently are still in place. So if the stock price does fall, it will likely be small and short-lived. However, the potential for the stock price to rise further is limited, as it is already at a fairly high level. The biggest concern is the possibility of a slowing economic growth, but the economy is currently doing fairly well. Here is the devil's advocate. The opposing scenario is that the market will fall to SPX 5450 and test the support there. The rationale for this scenario is as follows. Some economic data from the US today showed some negative trends, including a decline in pending home sales. NVidia's earnings did not meet extremely high expectations of the market. The tech conflict between China and Western countries is escalating because of new regulations on ASML being prepared by the Dutch government. The US is facing increasing tensions with China in the South China Sea. Dollar General's management highlighted the serious problems facing key low-income consumer segments. GMS, a building material supplier, reported that construction market is challenging. Iran reportedly increased its stockpile of enriched uranium, potentially escalating tensions with the Western nations. Historically, if you draw a double peak at the SPX all-time high on the daily chart, it often goes down. Taking all into account, I think the opposing scenario is at least somewhat possible. If this happens, bullish traders might do nothing and wait for the market to bottom before buying at a lower price. The conclusion is as follows. We still believe that the weekly market is on the upside and the daily market is hesitating. Although there was an unexpected drop at the end of today's market, we believe that we can go to SPX 5650 again on Friday with a possibility of a bullish close between 5600 and 5650. Starting next Tuesday, the market may eventually make new highs after a couple of setbacks. Traders may be wise to stay bullish, protect their positions, and do nothing. Also, traders may be wise to consider both our main forecast and opposing scenario to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.